Greetings, everyone. Welcome back to another episode of the Small Business Tax School. We're really excited to have you again. We have an extraordinary guest today. She has a ton of experience with the IRS in the tax world. And one of my favorite things about this guest is that she does an extraordinary job at actually strategically planning to help you implement ways to save taxes. If you don't actually implement anything, you don't actually save taxes. And so she does an extraordinary job at helping you implement ways to save taxes. Her name is Carlotta Thompson. And she is not your average accountant. For 7 years, she spent her days at the IRS systematically ruining people's financial lives through tax audits, while by night saving people's financial lives from her home office through her financial coaching. In September of 2017, she had enough and took her last breath as a dreaded IRS agent, opening the first accounting firm in the United States to offer clients tax strategy and implementation with her team of tax strategists and financial coaches. Her goal at Carlotta Thompson Associates is to provide education to clients that can feel they can feel at ease with their financial situation and no longer feel frightened by the IRS. So without further ado, welcome, Carlotta. Thank you for being here, and I'm really excited about this episode.
Thank you so much for having me. And one of the things you just said, if you don't actually implement it, all the things they hear on this podcast are a waste. So we always say, if we don't make you implement it, then you won't implement it, and then we have wasted your money and your time. And so that is what our whole focus is helping business owners pay the least tax legally possible. And we take it upon ourselves to make sure it's implemented and they don't have to think about it anymore.
Awesome. I really like that. Like, business owners are usually action takers for the most part. Like, that's how they got successful at business. That's why they have a tax problem, is because they've taken action at things, they've implemented things. But for whatever reason, in my experience, when it comes to tax stuff, all of a sudden they get timid and they don't want to take action on stuff anymore. And it's just like, well, I'll let someone else handle it. And that's just not the way you save taxes. So I really appreciate that.
As business owners, the first thing we do is learn how to do everything that we're doing and then hand it off. So when I wanted to do a podcast, I learned how to do a podcast and I learned all the terms. And I was like, oh my gosh, this is a lot of darn work. I don't want to do a podcast anymore. Let me find someone who wants to do it for me. But with taxes, like, besides everyone wanting to play the adult video game called TurboTax, no one really wants to learn about taxes. And so what happens is business owners have this huge fear of taxes. A lot of them get behind. They throw up their hands. They're like, I've made the money. I don't want to deal with the IRS. And actually, a lot of times they start limiting themselves because of the taxes. And so when I left the IRS, my whole goal was to make a full service solution that did the bookkeeping, the taxes, and the tax strategy. Well, what I learned in that is that some people love their accountant and they don't want to leave them. But their accountant won't do the tax strategy part because it's a lot of darn work. And so we split off our tax strategy services. And now we work with business owners, helping them implement the strategy so they can give a one-pager to their accountant and they can say, here you go, I need you to add this to my return. And so we know that the strategies are implemented and that everything is done with their tax professional and they are good to go.
Awesome. I really like that approach. That's because you are 100% correct. People love their accountants, and whether they're a good accountant or bad accountant, they just have developed a really good relationship with them, and that's fabulous. And they can still keep that, but now they get to use your expertise and the strategies you offer to now really, really impact how much money they're keeping, which is way more important than how much money you make.
Yep. Remember, it's not what your accountant costs you or charges you; it's what they cost you.
Yes.
And another thing is people think that their accountant is the one that's supposed to be saving them all of their money, right? Like, you think when you go to your accountant, they're looking for all of these things for you. And I will be honest, I thought the same thing. And then when I created my firm, I was like, there's no way. They've got tax deadlines they have to worry about. They have bookkeeping deadlines they have to worry about. And tax strategy really becomes the last thing on their plate. Also, you know how often the tax laws change. These things sometimes change weekly. I mean, I can't even keep up, and I'm reading what's coming out from Congress because that's my job. And most people that are doing taxes are simply trying to keep up with the law for compliance. they don't have time to keep up with all of the loopholes for strategy. And that's kind of, that's the difference, is you really need someone who is focused on the things that are coming out for the rich and aren't really put in the media. They're not really publicized. They're coming out specifically for those people who Congress has pad in their pocketbooks. They put these little things in there that they add to tax law, and those are what become our strategies. So it's very interesting.
Yeah. No, this is why I created this podcast, was so that I could interview people like you who spend their time reading what Congress produces, because it's boring. It's hard to understand at times, but inside those documents are the secrets and the ways that the ultra wealthy and the people that you're hearing on the news, they're like, why isn't Elon Musk paying taxes? Why isn't Jeff Bezos paying taxes? Like, it's because they have teams of people that are doing exactly what you're doing, finding the how can we combine things? How can we strategize, implement things that are going to actually keep you from paying taxes, not because it's illegal, but because it's here in this rule book that we have, the tax code, that we can now, this is our play area. What can we do within it? So you're the reason I created the podcast, was so that you can bring the value to business owners and let them know you don't have to fear not paying taxes. Like, it's okay. You don't have a moral obligation to pay the IRS your money. Like, you can do things that keep money in your pocket. So I really appreciate that you exist, and I'm excited for our listeners to listen to you today, because there's a lot of value that you can provide.
Yeah, and as we're talking about this, you also have to remember it's very important to get a tax strategist, or you're taking advice from someone who is actually reading the code in what Congress puts out, and that they're not coming up with these, because I'm sure you've seen them, these elaborate plans that are too good to be true, that are like, oh, you never have to pay taxes. That is not what I teach. I teach that there's definitely ways that are legal, that are in just the black and white. We're not crossing any lines. I was meant for ministry, but I was not meant for prison ministry. I'm not going to jail for you today, but I want to make sure that we're playing in the guidelines. And a lot of people will call this one-off tax strategy or whatever. They'll come up with some bogus thing that one lawyer in one state, in one little town put together, and that's a strategy. And I want to make sure that you guys understand those things are out there. Those things are what people go to jail for. This is not strategy as an overruling part of taxes. Is supposed to be legal, black and white in the code, and that is what we're going after. So make sure, as you're listening to people, that you're listening to people who are working within the guidelines that the government has put out.
Yeah, I love that. That's fabulous. It's the legal and ethical reduction of taxes. It's not you're not trying to be shady or hide in the dark or break laws. It's legal and ethical, and it's completely within your right to keep the money and implement the strategy.
Right, and a lot of people don't know this, and I tell this story a lot, but did you know that the government wants you to use tax strategy? So think about this. Whenever they are focused on green energy, what do? They give you credit.
They give you an incentive to do something. They're going to give you a tax break or a credit or something with it. They want you to do something with it.
When they want you to hire certain people during Corona, what do?
Yeah, they give you a credit.
If they want you to buy houses in a certain area.
Right, they reduce the price, right.
Exactly, the opportunity zone credits and so forth. So if they want you to hire a specific type person in your business, they give you the employment credits, the long, you were talking about, you had a guest on that was talking about the credits for employment. All kinds of credits are out there. The reason why the government put those into place was because they need you to solve that problem for them. So in Corona, they needed you to keep those people on. In green energy, they have a mission to fulfill. In electric cars, they have a mission to fulfill. One of the things I'm seeing right now that they're really debating in Congress is housing market. I think they're going to come out with a credit for the housing situation. Remember that the tax code is nothing but the way for the government to get that money into the hands of the needy, which is through child tax credits. And there's very few credits for people that don't have businesses. It's about 1%. But there is the specific ones like education credits, child tax credits, those few. But 99% of the code is for business owners. And it is made to actually meet the goals of Congress. And so if you have, like I said, the housing market right now is really dim and people can't get loans and the interest is very high and we're going in this bad place. And if you remember a few years ago when we were here, they gave a housing credit, and so they're going back in that same direction. And so the government controls your money of entrepreneurs by credits. If we did not have depreciation, which is a very big incentive, it's why Trump didn't pay taxes. If we didn't have that, whose problem would it be to create housing for the people in America?
Yeah, it's the government. They would have to do it, and they don't have the money to do it.
Exactly. And do you think I am a landlord and I have several properties? I have apartments. Do you think I would be a landlord if there wasn't all of these tax credits?
It's a headache. No.
I mean, look in California right now. Those landlords can't even evict their people that are not paying. It is a headache. So the government creates these incentives that are legal in order for them to get you on board as a business owner to meet their goals. And that's all this is. And so I want people to understand that, because then you understand why all these credits are out there, why we can create businesses just based on all the credits that are hidden, like these little gems in the code, like the Augusta rule. Okay, so Augusta rule came out of Augusta, Georgia. It was made whenever people would come in to Augusta for the golf tournament, and so people would rent their houses out for a couple of weeks during the golf tournament. So obviously, everything in Congress is made up of people from every state, so they get to put on these riders into everything that if there's something that they want passed, every constituent will put on a rider. Okay. And so in that, when they're trying to get things passed, obviously somebody from Augusta, Georgia, or somebody that had some connection there put on this rider that you could rent your home out for 2 weeks to yourself and it would be tax-free income. Well, that gave us where we use the Augusta rule. The business can rent your home to your home from you for 2 weeks. It's a tax deduction of the business, tax-free income to you personally. So all of those things are rooted in somebody wanted something for themselves that became a law.
Yeah, no, it's the way you explained that was just fabulous. And I really hope people picked up on that. Is the lawmakers have problems financially, tax-wise, and they solve that problem by creating tax law for themselves or for people that put money in their pocket, businesses.
100%. Do you know? Okay, so when the 20%, Section 199 came out, the 20% deduction that was put into place a few years ago, and we get a 20% gross receipts as an expense on our returns for business net income. It's crazy, and it's amazing. Like love the credit, But the reason there's a little piece in there that accountants are and some other people, doctors, can't take that credit if they make over 400,000. But engineers got excluded. Engineers have always been included. But in this specific law, they were excluded because someone giving money that was engineer based, which was probably from the oil fields. There's a lot of engineers in the oil fields. And they excluded them. A whole industry because somebody gave them money. Now,
right.
We need an accounting. We need somebody putting some money in them that are accountants, so maybe we can get some breaks.
Right. Yeah. Yeah. I like that. The problem is the accountants cause the lawmakers grief because they're auditing them and
they're not helping.
Yeah.
Right. So, just finding those things. So, my company focuses on those things, and we actually make you do them. Okay. So like when we say you rent your home to yourself for 14 days, we have you do certain things in those 14 days. And then we make sure that you are getting a deduction for that. And we do. Now, from this podcast, you're going to hear all these ideas. Remember, everything has an order. So if you do the 14-day Augusta rule, you have to have a contract, you have to have invoices, you have to have 1099s, you have to all these little things. Well, as soon as you hear that as an entrepreneur, you're going to be like, yeah, that's too much work. I'm not doing that. That's exactly what accountants think. They're like, oh, that's too much work. I'm not doing it. But that's what our company was built on, because I know from working at the IRS what has to be provided in order for that to be a tax write-off. And we do all of those things. We check every box. We make sure it's legit, and then we go all the way through with it. And that's what makes us different.
Right.
Just like hiring your kids. Somebody said that, I think you had that at some point. You're going to have that at some point. Same thing. Hiring your kids, you have to set up a family management company. You have to have the contract. You have to have a W-2. You have to, there's 8 things that you have to have. We do every bit of that and do it monthly. So everything's done and it's all put on the tax return.
Cool. There's so much value there. I really hope people are picking up on this, because we talked right at the very beginning, you have to implement this stuff. But when you have a company that's helping you, holding your hand and helping you implement it, it helps you get it done. And not only done, but done correctly, which is what's needed to survive. If the IRS does check on you, it's easy. Oh, look, we have all the check marks boxed, and then they won't even pursue it. It's just good to go. So,
and we actually do it for them. So, because we know if we leave it on their plate, they ain't doing it. And we actually provide all of the audit support. So if they get audited, we support them. We actually defend them. Cool. And so it's super cool. But, and this isn't, I mean, I'm just telling you how, like, this is what you should be looking for if you're looking for someone that is going to do this for you. So let's talk about some other strategies, because that's kind of what we wanted to go into, were the strategies. So we talked about a couple. One of the biggest things whenever someone is a small business, we always hear, what should we be? And every accountant will say something different. They'll say an LLC, they'll say an S Corp, they'll say all these things. But nobody really knows like what that even means or why you're a certain thing. So one of the biggest strategies is actually picking what you're going to be when you start your business. And the reason why is because based on what your business looks like, you want it to be classified as something different. So I always suggest going with an LLC. The reason, this is not legal advice. I am not a lawyer. This is only tax advice. An LLC is not recognized by the IRS. So you have to tell the IRS how you want that recognized. Do you want it recognized as a sole proprietorship, a partnership, an S corporation, so forth? And so as you're making money and you're like, oh, I'm going over that 40,000 net this year, I've got to let to be an S corp. Or I am losing, I'm going to lose 60,000. I need to be a sole proprietorship. So I always elect to be an LLC. I do a lot of business acquisitions as well. And so in that, a lot of times we have people that will go in and they'll buy a business and they'll say, well, we don't know how this is going to look, but it could mean that we have all of these Section 179. So when you buy a business, you break everything down into what you bought. Well, sometimes we buy businesses for $2 million and they literally have $2 million of first year deductions. So we might get an SBA loan for $100,000 and have $2 million of losses that can offset our other businesses. So in that case, you would want to be an LLC, because in that case, we'd want to be a partnership, because usually I'm going to have partners in that with me. And so when you start your business, your first tax strategy is choosing to be an LLC.
I like that. I think that's great. I think that's important for people, because I think you mentioned it at the beginning is a lot of people just hear S Corp or sole proprietor or C corp, and then they just go do that. They set up that specifically, but that locks you into a very specific tax code. And so
and
if
it
you're
is detrimental to when we're doing strategy. See, in the LLC, you can go back to when you started if you haven't filed anything. But if you file something or you elect to be a certain thing, you can't switch it. And so people will elect that stuff from the beginning and they don't even know where they're going and they haven't talked to anyone and they're just trying, right? And they'll do the wrong thing. So just become an LLC and then you can choose what route you want to go.
I like that. What are some other strategies that you're noticing that is costing people tens of thousands of dollars a year by not implementing? We've talked about the Augusta rule. We've talked about making sure you elect as an LLC first. What are a few others that we can just bring real quick for people's attention?
So another one is reasonable compensation. How many times do people go, okay, so when you're an S corporation, when you hit that over 40,000 mark and you become an S corporation and someone says, now you have to be a W-2 employee. And a lot of people don't know why you would want to do that. Well, the reason why is because every dollar in profits you make when you're a sole proprietorship, an LLC filing as a sole proprietorship or partnership is taxed with that darn employment tax. And that thing is over 15% of your money. And that is a lot of taxes. And so when you're paying that, we want you to, you hear, become an S corp, and then you won't have to pay that employment tax. Well, then you have to become a W-2 employee. Well, when you're a W-2 employee, people will pull out of the air how much to pay yourself. That is the worst mistake you can make. The IRS has very specific guidelines of how much to pay yourself. And I have created, from working there, a 4-factor reasonable compensation analysis that saves people thousands of dollars in taxes because you don't have to pay yourself more than you take out of the business. You don't have to pay yourself more than someone else would pay if they were in the business. There's all these factors that you don't have to do. And I have people paying employment taxes because someone told them they should pay themselves $40,000 a year in W-2 wages, and they are actually losing $40,000 a year and not taking anything from the business, but somebody told them they had to pay themselves $40,000, so they take money out of a loan to pay themselves and pay employment taxes on it. It's ludicrous, but it happens every single time I pick up a return. People are either not paying themselves anything, which is a huge red flag, or they're paying themselves too much, which is just giving money to the government for no reason.
Yeah. Excellent. Any more that you think is beneficial?
Look, I could talk strategy all day long. So another one is the accountable plan. A lot of people don't understand when you have a business, quit asking yourself, how can I make this a tax deduction? I hear that every time somebody goes and asks their accountant, they ask, is this a tax deduction? Sorry. Is this a tax deduction? Ask, how can I make this a tax deduction? It's just the change in question. If you're asking an accountant how to make something a tax deduction, now they have to think how to really change this into a tax deduction. So for instance, if you are going on a trip and it's pretty much a business trip, because everything's a business trip when you are in business, because literally we work ourselves to pieces. And we're normally going to meet up with someone out there. We're going to an event. We're going to something. You should be asking every trip you take, every mile you drive, everything you do, how can I make this a tax deduction? Okay. When you go to town, if you go to Walmart 30 miles from your house for groceries, I would be stopping by the bank on the way there and the post office on the way back, because I want that whole trip to be deductible. If I'm going to a event, I want the whole trip to be deductible. I also want you thinking about how can I make the things I love to do a tax deduction? I love to have meals. Budweiser has hundreds of horses that have nothing to do with beer. I'm assuming somebody's kid loved horses. How can I put those into my brand and that become a brand identity for me? But back to the accountable rule. The accountable plan is where you deduct everything that is partially personal. So when you are a S corporation, you can no longer deduct home office as an expense. You have to put it in an accountable plan. If it's not an accountable plan, when you get audited, it's gone away. If you have a personal vehicle, you're no longer allowed to take mileage. You have to put it through an accountable plan. If you have a trip or anything like that that was paid for personally, but you want to get it to the business, you have to have an accountable plan. What is an accountable plan? If you worked at Walmart, you know how they have a actual reimbursement policy? That's what an accountable plan is. It's a policy in your operating agreement that says we will reimburse this. It's just like having a healthcare plan. It's an actual plan document. And that's what you need to make all of this a reasonable expense that the IRS will accept. And that little thing, the IRS will say, you don't have that. We're taking it off. And so just knowing all those nuances and being able to take all of that stuff. I'll tell you the one reason why things get deducted in audit has nothing to do with if you had the expense or not. It has everything to do with substantiation of the expense. It is never, was this, this isn't allowed for any reason other than you don't have the substantiation. You can't tell me why it's a business expense. You went to Walmart. You can't tell me anything about that trip. Did you know the IRS can't require you to have actual receipts on anything but travel, mileage, and meals? They have to go with Cohen rule. And the Cohen rule says you can actually substantiate from oral testimony, from bank statements, from checks. Now, states have different rules, so I always say keep your receipts, but the IRS cannot do that. But if they ask you what a Walmart trip was for and you don't know, and you say, I don't know, they can disallow it.
Got it. So you need to have the documentation. So like that means you, as you're going along, as you're doing these things and implementing this, like you're asking the question, how can I make this a tax deduction? And then you're given reasons how you can. You have to document why you did it. Why is this a business expense? You have to document why. And that could just be a shorthand note so you remember, like, oh yeah, that was why I did that. That was that day where I went and did that visit where I went and stopped by the post office because on the way home I needed to check my mail for the business. Whatever it is, just have a note, right?
Well, not even that. Like those are all obvious. It's the things that aren't obvious.
Okay.
Like
Got
if
it.
you don't have your receipt for Walmart and you don't remember what it was for, like that would be disallowed, right? But if you have your receipt or don't overthink it. What I'm trying to say here is the IRS actually needs a lot less documentation than they request. And so if you ever get an audit, make sure that the biggest problem I ever had in audits were the accountants that represented the people because they didn't know what was allowable. They didn't understand the Cohen rule and they didn't understand how to recreate documentation. And this could be a whole other podcast in itself, but that they just didn't do it right. And they would say, oh, just disallow it, just disallow it, just disallow it. The best thing you can do if you were in an audit is to be there because you remember if you could jog your memory and know what that stuff is. You don't have to write it down. The only thing three things you have to have more documentation for are meals, mileage, and travel.
Okay. I like that.
The only thing that you would get a little bit more documentation on if it was like, I'm writing off my meals. What's the purpose? Well, they're by brand image. They're in these ads. They're in this because that's going to be something gray that the IRS is going to question. It's not gray. It's black and white. But the IRS is going to be like, why are you deducting your meals? You're an accountant. Your meals accountant. Well, I have this show with these on there. Boom.
Got it. I like that. Well, I think this has been exceptionally valuable for our listeners. I hope that they really picked up on the big theme is saving taxes is not on your tax professional. It's on you as the business owner. And I know that might stress people out, but it's not as bad as people think, especially when they have someone in your corner where you're walking them through it and helping them get it documented and helping them do it so it actually gets done. I think that's valuable. And I really hope people realize it's coming from within. Just like your business was started from within, you had to go execute it. Same thing here. And it makes a big difference because it's tens of thousands of dollars at times. And even if it's a couple thousand, that's a big deal. That's money that now gets to be recreated by you, re-put into your business, re-put into your family's life, whatever it is that you're going to do with it. It's powerful for you to keep those dollars. It enables you to do more, be more valuable. So I really appreciate your time. Carlotta, is there anything that you want to offer listeners or anything that you want them to know about that you can, so they can find you, so that they can hear more of your value?
Yeah. And just to put on that, it takes $1 for every dollar in tax savings. It takes you $7 in gross receipts. So a lot of people think they can just outrun this problem, but think about that. For every dollar in tax savings, it takes $7 in gross receipts. So yes, come to. We have a webinar. The link is going to be in the show notes. We have a webinar monthly of how to pay zero tax legally, and we go over lots of strategies and how to put these strategies together. We have also, you can find us, our company now is called Tax Strategists of America. We are focused on tax strategy. You can find us off of carlottathompson.com, which is my personal website. And we would love to have you guys come and listen to all the things we have to say about taxes and how we can help you pay the least tax legally possible.
Awesome. I really encourage everyone to check that out. Check out the webinar, find out if it's more value that you can actually act upon, because I really think there is. And then go check out the website and really hit it up. It's all that information will be in the show notes if you didn't catch it. And we'll catch you next time. Thanks for being here.